Hello, everybody. Well, I'm still on vacation, but I look at the stock market still once in a while, and the headline today is that Nvidia is up 25% after hours, and that is just stunning. That would mean that the market cap of Nvidia is $950 billion. Nvidia is the fifth largest company in the US, much bigger than Facebook, much bigger than Tesla. In fact, it's almost twice the size of a Tesla. Congratulations to every single Nvidia shareholder. I was wrong to sell it. I sold it early, and clearly right now with the current price, this tells me that I shouldn't have a stock that is overvalued. Per my view of what overvalued means, that stock can be even more overvalued, and this is akin to Amazon. And Amazon is overvalued all the way up, all the way to 100x times your money. Amazon was overvalued, and it keeps being overvalued. Well, this seems to be the case for Nvidia. Absolutely stunning performance at 25%. Keep in mind that increase in percentage point is like bigger than AMD's market cap. It's absolutely tremendous in just one day after hours. But this channel, I try to focus on the fundamentals. At the end of the day, you're just buying a share of a business. What's the share of that business one would be owning if they owned Nvidia? And by the way, remember, I used to own Nvidia, and I like Nvidia. I think it's a great company. I think the business is doing incredibly well. Fundamental company at the heart of AI, most important company in the AI GPU, AI chip business. Absolutely stunning and outstanding. And nonetheless, if you look at their revenue breakdown, and thank you to App Economy Insights, I didn't have the time to pull my own number, but if you look, it looks like, yes, their revenue dropped quite a bit, and much of the drop of this revenue is due to the merge, the Ethereum merge, and the end of crypto mining, at least as we used to know it. So they stopped selling a lot of gaming chips, but it seems like even though the gaming business is still pretty much stagnant, not doing really too well, the data center business is exploding and is getting better and better and better, and it's exploding so much to the point that they provided a stunning guidance. The guidance they provided was for Q2 of 2023. Sales expected to be $11 billion versus 4 quarters ago, in Q2 of 2022, sales were 6.7 billion. So if you were to do a quarter against quarter comparison, you would be at 64% more revenue today than you were in last quarter. So huge reversal, tremendous guidance for Nvidia. Definitely a counter trend to a lot of the stocks we're seeing. If you see, the revenue had been down quite a bit. The revenue from Q1 FY 2024, what I would call Q1 2023, from Q1 2022, you could see that was down 13%. So right now, there's a huge turnaround in the business. There's no denying that if they actually achieve what they say they will, $11 billion in sales in calendar Q2 of 2023. This is stunning. This is a stunning outlook, especially for a company this large at 950 billion market cap. The only company I can think of that is this big and grows this fast is Tesla. As far as revenue growth goes, that's the only one really. I mean, this is stunning. And kudos to all of the Nvidia shareholders. Kudos to me for buying it a while back, and then bad job for me for selling it. But nonetheless, you have to be a little disciplined. And when I sold Nvidia, I looked at myself in the mirror and I was like, I'm not a gamer. I'm not an AI specialist. I can't judge that as well as a lot of other companies. And obviously a lot of people who own Nvidia are gamers. If you look at the YouTube sphere on Nvidia, it's people who really understand these chips and who've really seen them evolve and get better. And they've had enough experience with the product to grow that conviction. And congratulations to them. question that I want to ask here is, how much are we really paying for that growth? Nvidia is not growth at a reasonable price. Nvidia is some of the most expensive growth out there. And so I went back to my usual spreadsheet that I publish on Fridays. And I said, well, let's assume this is not a knee jerk to the upside. Let's assume this is not a lot of companies racing to order AI chips, $10,000 chip. That's quite expensive. These A100s cost a fortune. Let's assume this is not a knee jerk reaction from all these companies ordering these chips. Let's assume this is going to last, and this is actually going to be 64% for 4 quarters in a row, 1 full year. So that means I would update in my spreadsheet and I would put it to a 64%. Well, guess what? Even if I do that with the update in enterprise value as of this morning, right, with the 25% up after hours, even with that, I am still at above a 1 on the enterprise value over gross profit over revenue growth. And you know that I'm looking to buy a stock when it's above a 0.9. So even with this absolutely outstanding next 12 months growth, which I don't think they're going to achieve. I really don't. That would be so stunning if they did. I don't. This is Q2. They guided Q2. This is not the full year. But even if they achieved it, and in fact, I could take this further, and you could even increase it, and notice that stock would still be expensive. If that stock still had 100% growth, if that stock were to double revenue growth, they would still be expensive. This is a stock that costs a fortune. That's why I've been selling it. That's why I sold it. From a stock price standpoint, from a market value standpoint, that was a mistake. But from the business standpoint itself, nothing to me warrants that valuation as much as I love Nvidia, and it is my mistake. And I want to spend just a little bit to say that really a stock at this valuation should be a perfect stock. There should not be anything, anything major, anything big, any major threat. To the risk of shocking some of my viewers, I consider Tesla, for example, to be a much more perfect, quote unquote, perfect story than the Nvidia story. And Nvidia has some risks in the story, big risks, and the good way to be compensated for that risk would be with a lower valuation. If you look at some of the risks of Nvidia, first of all, let's just talk a little bit. One of them is gaming. Gaming's not doing very well. Look at these numbers for gaming. I mean, you're still down a good third compared to a year ago in gaming. A lot of the gaming sales were skewed by cryptocurrency mining, so they're not doing too well with gaming. They have a lot of competition from AMD, although I'm not a gamer. You may tell me I'm wrong, and they're doing very well in gaming. But the numbers tell me they're not doing too well in gaming. There's a slowdown in gaming. If you were to do the comparison between Nvidia, say, and what's happened with C Limited and Garena, it seems like from 2020 until today, there's been a slowdown in gaming in demand, and we understand then why with going back to normal and everything like that. But if you look at the revenue breakdown, gaming is down. There are other plays, which if you've watched the keynotes of Nvidia, which I've watched all of them, you may remember 1 year and a half ago, almost 2 years ago now, some of the big deals for investing in Nvidia was their other category with the OEM equipment and with the self-driving car. I mean, that unit, if you look at it, it looks like a hobby. Really, I mean, it's half $1 billion. It looks like a hobby. That's not picking up either. That's all over the place. I can't see a trend. And data center is up. Data center is the clear winner for Nvidia. Nvidia is being saved by data centers. They're doing amazing things there, but it's not a flawless story. When you look at the revenue breakdown, it's not growing across the board. It's not flawless. Gaming is still a black spot, I would argue, on Nvidia. They should do better on gaming. And there's another problem, I think, with all of a semiconductor stock, and it's Taiwan Semiconductor, TSMC. Let's remember that companies like Nvidia and AMD, they are fabless chip makers. Now, that has a lot of advantages. You have higher margins, lower capex. It's great to be fabless, but at the end of the day, you're an IP firm. And any other IP firm can contract out to TSMC. There's obviously a lot of proprietary technology in the engineering for both companies like Nvidia and AMD. But if you look at the other players in this field, they are very powerful players. I mean, if you look at Amazon developing its own AI chips and Microsoft partnering with AMD to develop its own AI chip, yes, the knowledge of Nvidia, the knowledge of AMD is unique and best in class and best in world, but I don't think anybody can say that Amazon's knowledge or Microsoft's knowledge in that area is bad or even average. These companies are outstanding companies, and they're actively contracting out with TSMC. They may even contract out with Intel someday. So this is important stuff that I would say here. There may be a flaw in the business model in that their products are not made by them. They're not a fully integrated maker of product. They have a supplier for their products, right? They contract them out. And also, I just want to say, could the jump in the data center sales of AMD be another knee-jerk reaction to the upside? Just like for crypto, if you follow NVIDIA, the stock really saw a major upside from crypto and exploding crypto sales, and nobody who was into gaming could get those gaming cards. Nobody could get them. You had to go to eBay to get them and pay thousands of dollars while the MSRP was like $400. That was the story of crypto. If you look at the A100 chip for Nvidia, if you look at what they go for on eBay compared to retail, that's kind of the same thing. It's like, it seems to me as though companies were triple ordering just to make sure that they get the chips that they need to develop their GPT programs. So it's interesting. And I won't go into this video, but TSMC as a geopolitical risk, and I think that's an overhang. For all of the semiconductor stocks, if you follow Jack Ma, Alibaba, this is related to the whole two worlds, two systems, and as long as TSMC has not finished the manufacturing facilities in the US, this will be a geopolitical risk, and so that's a lot of risks, if you ask me. That's more risk than many companies are out there. I think these are unlikely risks, but if they happen, especially the geopolitical risk around TSMC, that could be devastating for the stocks, and so many stock in the hardware making sector. And I think that's one of the reasons why, for example, if you look at Tesla, they want to do as much as they can in-house because they don't want to be dependent on a lot of things that are made by TSMC. And let me conclude with valuation. Valuation is less exciting than talking about what these businesses actually do, but I think it's important in this case. And it's only important. I usually don't care about valuation, but in the case of Nvidia, I care because that's 37 times sales, 65 times gross profit. And if you look at my spreadsheet here, which I've updated, AMD, if you want to be exposed to this space, in my view, AMD, which I still own, is a much more reasonable valuation in a very, very similar space. AMD is a little more diversified, and their GPUs, if you talk to a gamer, they're not as good, but they're still partnering with Microsoft to develop a AI GPU, and they still have Xilinx, and they power Teslas, they power a lot of gaming consoles. They have a lot of good things going for them, AMD, and they're reasonable compared to Nvidia. Because keep in mind that growth here that I have at 64%, I don't think it's going to be that. I think it's going to be way lower maybe 20-25% when you extrapolate it on over 4 quarters. And when you do that, then the EV over gross profit over revenue growth jumps back to a 5, not a 1. I'm very generous and almost silly to give them a 64%. A company that big doesn't grow that fast. It's just the law of large numbers at this point, at least in my view. And that's where I'll be provocative and talk about HIMS. Yes, HIMS has been falling for 5 days in a row, and I've been buying 3 out of those 5 days, slowly building a full position on HIMS. Very happy about the drop, by the way, even though it's a bit of a roller coaster for anybody owning the stock. But don't get me wrong. I think people who own Nvidia, they're used to roller coasters, very much so. If you look at the stock chart of Nvidia, you would be used to a roller coaster. Being a volatile stock, a roller coaster is not necessarily a bad thing. But if I look at HIMS, they're trading at 3 times sales, 3.7 times gross profits. And so depending on the metric you look, if you look at gross profits, for example, it's 18 times cheaper. 18 times. I mean, this is not like 18% cheaper. We're done talking about things like, oh, it's a 20% or 25% margin of safety. No, you're talking about an 18x cheaper. That's not a margin of safety, but you know what I mean. It's insane. If you look at how much you're paying for that growth, assuming that absolutely crazy generous growth number of 64% that I gave AMD, you're still 14 times cheaper. Now, if you don't do that, if I don't give this generous of a growth guidance, if I give them 20% ish, you're almost 50 times cheaper for HIMS on a growth basis. Remember, this metric, if you've watched my channel, this metric asks how much am I paying for each percentage point of growth. Each percent that I see here, what's the cost? And the lowest number, the better. The growth at HIMS is dirt cheap. The growth at Nvidia is very, very expensive. And then you have a question of revenue quality. Nvidia, we know that the Nvidia revenue is cyclical. These chips, they last a few years, 3 years, 4 years, and then they have to be replaced. And we know that HIMS revenue is recurring. You have a little bit of an unknown for HIMS revenue because these are health subscriptions. And if a customer, whatever they're doing, they get it fixed. If it's a chronic condition, if it goes away, like we don't know how long because it's still a new company. HIMS is a 5-year-old company, so we don't have a look back. We don't have a track record. But nonetheless, I would argue that if we had a long track record for HIMS, recurring revenue is better than cyclical revenue. Oh, they have to replace 3 or 4 years from now. You have to fight to make a sell when you're in a cyclical business. You sell a $10,000 A100 chip. 4 years later, your $20,000 chip, you have to fight for that sell again. Recurring revenue, i.e. say a subscription for air loss products for $30 a month or $40 a month, you don't have to think about it. You get it in the mail, you use it, and you can go on for a decade. So I think recurring revenue is a better quality revenue, but we don't have a track record, so I'm not going to claim that it's actually that. I mean, it's riskier. HIMS is riskier, but the valuation risk that I think one is taking buying Nvidia right now is just insane. But Nvidia has a lot going for it. They have a better track record. They have an amazing track record. They have a stable market cap. They're in all of the indices, the NASDAQ, the S&P 500, any total world index, they're going to be at the top, right? So this is a company, and they're almost $1 trillion. I mean, it's a stunning. But one has to ask: is the valuation, 18 times cheaper for HIMS compared to AMD? Is the risk of a small cap really 18 times worse than the risk of a mega cap? And I don't think so. That's why I sold Nvidia a while back, and that's why I'm adding to HIMS. And of course, it is your knowledge of a company, it is your knowledge of a stock that makes you confident in a play. Nvidia has had an outstanding run. it can keep going. But in 2004, for example, would someone have had the foresight to buy Nvidia? And it's very, very unsure. It's very unsure of that. But nonetheless, track record of Nvidia is absolutely outstanding. I think the stock is way too expensive right now. It is not reasonable at all, this price. But you can be wrong on valuation for a very, very, very long time. And a stock can be very overvalued all the way to 100x. Let this be a lesson to all of us. Let Nvidia be a lesson to all of us. I'm happy I sold it. I think it's too expensive. I think the stock is still gonna go down in the long run from here. This feels, if you study the .com era and all of these stocks going up so much in the .com, I think the chart of Cisco is very telling. And when I look at Nvidia, I think about Cisco Systems. If you look at Cisco Systems, you'll see that you didn't lose money if you bought at the peak in '99. But you still had to wait 13 or 14 years. So if someone is in my view, not investment advice, but if someone is buying Nvidia right now or owning Nvidia right now, you better have a 15-year out view. At least that's my take on this. 15-year out view is at least a minimum, because this is a stock that can be in a valley of despair, in a valuation range for a long while, just because it's so expensive right now. Anyways, I hope you enjoyed this entertainment. This is entertainment only, and I strive to make great entertainment. This is obviously not investment advice. There's no investing, there's no advice, there's no investment advice here. I appreciate your likes, I appreciate your subscribes. Took some time away from my vacation, but I miss you all, and I miss talking about stocks. And I'm grateful for my almost 2,000 followers, and I'm grateful for all of you. Thank you so much for watching. Have a wonderful day.